Hello and welcome, traders. It is actually Thursday morning, February 1st, 2024. We're going to do the Wednesday recap here. We didn't get to it last night due to some scheduling conflicts, but we'll jump into it today. We'll do a quick recap of the market and nothing to see, right? So SPX dropped on the day yesterday, a pretty hefty drop overall. So seeing a nice drop on the day, mainly because the Federal Open Market Committee came out, held their January meeting and said, we're not going to cut in March. And that triggered a pretty nice sell-off. Now, for us, it was a pretty cool opportunity because normally when the Fed comes out, and we'll take a look at yesterday's trading, we can see it pretty nicely in SPY or SPX here as we go. But normally for us, a good opportunity, and again, I'm not recommending anybody doing this, but it's a good opportunity to scalp because typically the first reaction is usually the wrong initial reaction to the Fed's statement. So we didn't expect a rate cut, and if you've been watching my videos, I've told you that the predictions for 6 to 7 cuts this year are completely off base. I told you that maybe we would do 3 this year. And the Fed came out and said, essentially, yeah, we're not going to be even cutting in March because inflation still remains sticky. Inflation's not really going away. Maybe it's dropping a tad. Unemployment is not rising. The GDP and the economy are cooking along at a pretty brisk pace. So things continue to heat up in the economy. And despite the fact that there's some inflation, people are still just buying stuff anyway, and they're slapping it on their credit card. So none of these things are really great for the Fed. So I don't know where everybody was thinking the Fed was going to just keep cutting. Why? Because they should. There's really no reason to do that. Well, anyway, we'll leave that for another topic. But I'm still sticking to my maybe 3 cuts this year. And it looks like there's not going to be one in March unless something happens that's significant. Now, if there's a significant event, plunges us into a deep, dark, horrible recession, which I'm not sure that's going to happen either, or a giant credit crisis because everybody's cards are at max here, but people are also sitting still on decent cash and stimulus that the government gave them. But what happened here, this is a pretty nice opportunity during the day. If you look in here, this is my little bit of a day trading scenario, and I use the MACD here. I have stochastic momentum, and I have the RSI. Those are my 3 key indicators here on the on the 3-minute, and then on the 15-minute over here, I add in the squeeze as well. And you can see that we were really starting to kick into a squeeze right before the Fed. So that was interesting to see. And here's what happened. So right about here let's see, about 2 something and change. Markets just started selling off 245. You can see this thing was going. I'm sorry. Let's start here. You can see we were heading in. As soon as we got to about 224, we'll start there. Markets started taking off a bit on us. And when you look at what's going on in the market, this gives you a good opportunity to potentially put some trades on or see what's going on. Initially, we spiked up here decently, and you were able to either run some of this higher into this overbought section here when we hit the 3 ATR, and you could see that as we spiked up here on the Fed news, okay, a little bit of a sell-off, okay, initially, so 2 o'clock, market started selling down, which is initially the wrong move. We got long, we rode it up as soon as we really topped out here, and you can see as soon as we get to this overbought on the RSI, right around 240 or so, getting out, and then you can see a pretty nice reversal candle here and stochastic momentum turning the other way, RSI heading down, MACD ran out of steam, and got long, scalped for some ES to the downside. I actually got out here when we got overbought, so I got out here. We could have made more, but it was a good scalping day. But initially, this first move is usually the wrong move in here. at least initially. And we did. We reversed higher, jumped up, and then just started to sell off. So no rate change. Okay. And then the news that, hey, we aren't probably going to move in March, that just sent this thing lower and lower and lower, finishing the days near the lows. However, all that's probably going to get largely erased today. By at least a quarter of that move will probably be erased today as we look to be open to the upside, opening to the upside on Thursday here. So people had a chance to digest this move. Was it an overreaction? Who knows? All right. Anyway, that was a good opportunity there. I don't necessarily recommend that you just go and gamble and throw those on, but I think it's always a good opportunity during those Fed announcements to potentially watch for a quick reversal on the initial move. So the first move initially within the first few minutes or so usually gets reversed decently, and you can always scalp a little bit. Now, getting the second scalp on the way down was even more exciting. All right, so let's take a look at things. Where do we go? And we're going to keep it really brief today on the charts and dive into the account. You can see here that on SPY, this is this week's largely led by yesterday's move, is giving us a reversal week here. MACD has been kind of all over. It's been moving up, little down. RSI has been slowly creeping up. But you can see as we hit this new high this week, okay, on RSI, we're actually lower because of the move as well. So we're really not hitting new highs, and squeeze is getting long. I still think we're overdone a bit here on the weekly, but this is still a bullish chart. Every single moving average is stacked, moving higher, and getting wider. So overall, with the exception of this 921, that might be narrowing a bit. I mean, the 21 is getting further from the 50, which is getting further from the 200. They're all pointing up. Still very, very bullish. I expect that even a pullback to here is just a new lower high and another reason to move. So still overall pretty bullish in the markets. Looking at the daily, pretty big down candle yesterday. We went all the way to the PSAR candle here. It's still in the PSAR bullish trend, and we didn't trigger, and we're going to be bouncing higher, at least at the open today. So right now we're still in a bullish mode here overall. And you've got higher high, higher low, higher highs, and then we'll see if we get a higher low. Anything above this 470 area, which is your 50-day moving average, is still another higher low. So a pullback, totally fine and welcomed. We really would like to see that. All right, if look at the Qs, pretty much the same scenario. So I'll be just quick on it. Weekly, I think, is running out of steam a bit, even though we're in a nice uptrend. Good pullback is just something healthy for the market. And it looks like maybe it's on its way. Today might be a little bit of a bump. NASDAQ's running higher. Futures aren't quite as strong as they were overnight. And then on the IWM, I think this is poised to potentially take some opportunity in here as well. So I'm watching this. We've got a bullish PSAR move, okay? But you've got MACD and RSI heading lower. So right now we're not getting any momentum to the upside, but big run, nice pullback to about the 200 and then a bounce. Okay, we're still not quite stacked, but we're getting closer to setting up a pretty nice IWM. If we look over here on the daily chart, okay, you can see MACD's moving higher, trying to break the zero line. We do have RSI heading lower, so we'll see if we get any follow through today. It's going to be up this morning at the open a couple points, so we're going to be back up to the 21 EMA, a little bit of a bounce. Right now, you've got squeeze starting, so you're getting into a squeeze here. Overall, a bit of a bearish trend on the daily and a bullish trend on the weekly. I think this sets up nice for some strangles. All right, so there's that. VIX on the day popped up a bit yesterday, is down a bit today, still only around 14. Don't really care about the VIX. We just have very low volatility. Well, let's take a look at the US dollar on the day. That bounced up a bit on the day to end the month with a pretty good up month on the US dollar. Now you've got us trading sideways. So really this trend line that we've been in, I grabbed not sure why I grabbed the whole thing, but we can bend this trend line back out here a little bit more. I don't know where we can find the most tags to it, maybe somewhere in here. All right, so we can extend this resistance level. I don't know why we keep resizing. Okay. All right, so resistance here, we keep trying to break through it. We can't seem to do it, but I think the dollar overall looks more of a ascending wedge type of pattern. Let's even roll this out a little bit more like this. Okay, this is really more of an ascending wedge and a sideways triangle. If we break above here, I think we get a pretty nice continuation run. If you're looking here at the weekly on it, MACD's heading higher, RSI is heading higher, squeeze is reversing its momentum. Just on the daily, we're really moving sideways for the most part here. So nothing here showing strong reason to break out, but I think if we break this out, the weekly momentum is higher. Dollar could technically move higher here. All right, and then if we look at the 10-year rates, okay, we broke significantly this downtrend yesterday. So the 10-year really gave back these rates. Why? Because the Fed says they're not going to raise. Okay, they're not saying they're going to add more, but they're definitely not going to cut. Okay, so they're not going to probably raise. They're not cutting anytime soon. So why would you think that the rates would increase here? Of course not. Why would rates move up? Even though I think this move on the weekly was overdone because people thought the market was going to cut and the Fed was going to cut. This is a 100 basis point expected move, okay, which was overdone, and now we rallied higher because the Fed said they weren't going to, indicated they're not going to make this. It was just overthinking on the TNX, in my opinion. I still expect this thing to move sideways more, but you've got, the daily moving lower. We'll see how low this continues to go, but I think if rates on the 10-year, continue to drop a bit more, you're going to see bonds continuing to move up. All right, let's jump into our key, our core four, as it were. These are the four futures that outside of ES and NQ that I watch for trading opportunities. Nice pullback in oil this week, a big pullback yesterday, which was pretty nice to see. So, we don't need it to go straight up all of the time. Nice pullback. And then right now it's looking to open higher. Well, it's already open, but in the after hours and pre-market, it is definitely heading higher. And you're getting the 21 about to cross the 50 here. That would give us 3 of the MAs stacked and moving higher. I like oil. I just like this upward bullish look on the weekly. So things look fairly bullish on the weekly, and they're just currently a little bearish on the daily, setting up perfect for strangles. This is one of our key income generators. We are heavily invested in oil futures right now with all kinds of trades, ratio spreads, 1-1-2s, strangles, more ratio spreads. And I think all of that lends itself to pretty good returns for us. And that pullback yesterday was really nice and healthy, I think. All right, if we take a look at gold, this one's a bit more bullish. If we're looking at the weekly, I think overall on gold, this is a bullish trend on gold. And obviously, if we took the trend line from down here, drew one up, you've got a bullish trend line dating back to October. We've only hit it once, so it's not a super established trend line. We've got previous trend lines dating back. If we take a look at the weekly charts here, we have to go to actually a monthly chart on this thing. So let's go back here. If we go all the way back to 2018, okay, this uptrend on gold, okay, is still intact and continues to move higher. So we've moved up, sideways consolidation. We've been in this range with gold now for quite a while. So since 2020, Okay, we're now almost 4 years in a sideways range, but an overall slow uptrend that we've been in. Right, so I like the way this looks. Okay, if we break out of this range, which technically you've got resistance right about where we are. This is the same highs here. This resistance level here could really see gold run, and this is 1666 to 2170. Let's just say this is like a 500-point range. If gold breaks here, okay, you would expect over time a 500-point move. Now it takes maybe from the bottom of this channel to the top. Typically, this has taken a little over a year each time we've moved from top to bottom, okay, or from bottom to top. Takes about a little bit over a year. So, gold could move up 500 points this year if we can break through, I think, this resistance level, which will pop back on here. So that's my take on gold. Now we've got this level here to get above, and this is the key level. So if we break above this level at 2195, so this is the key to me. If we break this, I think that could be the start of a pretty good bullish run on gold. But if you're looking at the weekly, still a nice uptrend currently that we're in, a pullback to the 21, a bounce off of that. I still think that looks pretty good, even though on the daily here, you have a bit more of a pullback. But if you really looked at a line going down here, we've broken out of that downtrend line. However you want to draw the downtrend line, whether it's back from here from December, or you want to draw it from here, beginning of December and the end of December here. Either way, we've broken that downtrend either sideways or slightly higher. Gold giving back a bit today. Had a pretty good pop yesterday and then closed just off of its highs. I like gold. I think you got a little bit of a weakness here on the weekly that's starting, running out of steam on the MACD and the squeeze. RSI just kind of hanging in there, but running out of steam a bit. So running out of steam on the weekly, even though it's bearish, and then here on the weekly, a bit of a bullish move right now. Great for strangles. So I think gold's setting itself up nicely for strangles. Copper being the third of my favorites to take a look at here. And if we, you can see that we've been in this nice range for quite a while. We've broken it. Okay, we're back inside this range. And this is what we're watching. You've got MACD starting to crank higher. You got squeeze moving higher out of a squeeze that it was in. So you had some decent momentum here, potentially to the upside. RSI is moving higher. So bullish on the weekly. And if we look at the daily, it's just really sideways. We've had a nice move recently, running out of steam here. It's just setting itself up for just more great strangle opportunities. If we break this 39.5 area, so 3.95, if we break this, okay, then I think now we go up and we start to test these previous levels up here around 4,300, which would be about, again, the same width of this too. We run up to here to about 4.4, something like that. So we're looking for that. We're watching for it. If copper breaks, that's where we're going higher. Right now, we're just maintaining here, but good MAs. And then the fourth of the core four that I'm watching on futures are bonds. We've talked about rates dropping, which is going to push bonds higher. Overall, bonds are a bit weak on the MACD, but strong and weak on the RSI until yesterday, really, or till this week. And then you've had a strong move up. I think this move up is running a bit out of steam, but we'll see what happens. We tried to break through here. We're not. We're struggling. We're just in a sideways pattern, maybe a bit more of even a wedge pattern now that we can look at, as opposed to just focused on. And so if we look at this wedge and this downtrend line, so obviously the downtrend line continues. We're going to remove that to make it easier to see. If we look over here on the daily, yeah, we're in this wedge. We ran up to it yesterday on bonds. You've got good momentum going. So right now, bonds have a strong momentum going on the daily. But the weekly, I just think we're running out of steam a tad. We could go higher, but I think it sets itself up for a nice strangle opportunity, or 112 with a higher bias, sideways movement for now. 112s and strangles are perfect. And then the last one I'll touch base on here. I told you I wanted to keep it quick, and I'm not keeping it as quick as I want to. 6A and 6E, I do like to take a look at those periodically. You've got a bearish trend on the Aussie dollar, bearish weekly movement. And then when we look over here, we are just moving sideways, and now we broke out of this kind of sideways consolidation area to the downside today. So as the dollar strengthens, it's going to keep making these even weaker on the Forex. So 6A and 6E will continue to weaken. 6E remains in this downtrend that we have going on here. So it's below all of its moving averages right now, staying out of most of these, but I think you could be considering some strangle opportunities at some point. But right now, I'm just going to let this thing rock and roll to the downside. Weekly is in a bearish trend, and daily is in a bearish trend. No reason to get long 6E here, and pretty much the same thing on 6A. There's just no reason to get super bullish on anything that we've got going on here. We'll keep watching this particular downtrend, current downtrend line, just lower lows, lower highs, and that's where we are. All right, let's jump into our trading accounts and talk briefly about what happened yesterday in the account. And the great thing for us in this trading account was we didn't really get affected by a whole lot of anything. The S&P dropped 1.61% yesterday. So 1.61 drop on the day, but yet our account only dropped 0.0 or 0.7%. Okay? 0.7%. So we were roughly 1/3 of the drop that the market saw yesterday. We only witnessed 1/3 of that. We'll talk about a little bit more of that why, but we are still fairly delta neutral. We're still under 0.2. We did move up with the markets moving lower yesterday. We did move up on delta, but that's totally to be expected when the markets sell off a bit. Theta pumped up 1256. You got volatility with a little bit of a tad pump up yesterday, but really not much of anything. But we have 0.3 theta, which is good. It's the best theta readings we've had in a while, and we added some more trades yesterday. So during yesterday, we did trade, and then we finished at 415, 585, only down, not even barely 0.7% was where we ended the day yesterday. All right, and then we finished the day at 54% buying power. So buying power ticked up, but we put on a massive buying power trade yesterday. But we also closed a trade. So we took in another $1,100 to finish the month. Overall, our monthly realized, and we'll put this in live as we're doing it. So we'll go all the way back here. Okay, 21,908 was the monthly realized. We're going to take this and move it up as well. So 5.54% on the month. And I'm going to draw this in with the bold lines. I'll fix all this later. I just wanted to quickly go through it with you guys. On here, we'll put the bottom and the top in. Okay, we'll get the right color green going. But other than that, it was a pretty nice looking month overall. Okay, we'll keep it right here. So good looking month. We've ended up over 5% up on the month, which is pretty good. If we take a look at the SPY year to date, this thing's up 2.1%. Okay, so 2.1%, and we're up 5% in our account. So loving where we are and loving the setups that we have. I feel we're fairly well diversified right now. I covered diversification the other night. If you didn't see that video, go ahead and check that out. We'll start a new month here, but the first month of the year is in the books. Great month overall for our positions. We did only close one long-term 112, which is great because we'd closed 3 in December for a big month. We didn't need all of that core income from here anyway, as we had great strangle trade winners, $6,000, over 6,000 strangle trades. over $11,000 in 112 trades. We had just to put debit spreads expire on some FB trades. 0 DTE knocking out $2,600 in gains there, and a ratio spread gain, and then 1,900. What did we close yesterday? Yesterday we did close the naked puts on a 112 trade. So we closed on our HG, so one of the core four that we watch. We have 112 trades on there. We closed the naked puts out on that. So that gave us our final realized gains for the month, and ends up with a great month. So 21,908, 5.54% realized gains on the month. So fantastic month of January, and we're set up, I think, well for what's coming the rest of the year. So we'll keep an eye on how everything else is moving going forward. And then if we take a look here at the IRA yesterday as well, we finished the IRA only $300 off of our all-time high. So we didn't generate a ton of money because we had cashed out a bunch of things. We did have, we did generate $3,000 in here, but we had taken so many off in December on the run that we had that we didn't get a chance to take it off. I expect that this number will significantly increase right now. So not a giant return in the IRA. It's safe. It's running. We did generate some decent little income in here. It's pretty safe, and it continues to move higher, but only up about 1% on the year so far. So nothing exciting when we get to the IRA. If we're taking a look at the Fed, here's what happened yesterday. Just the last couple things I'll leave you with is, you look at the blue, that's currently, and the kind of the off blue next to it. We dropped from a 52% chance of a rate cut in March down to 35. I don't know why it's still 35, but you can see we went from, again, 45 to 65% chance that rates will stay unchanged. Apparently, people don't believe the Fed when they say we don't see a rate cut coming in March. People aren't still believing them because they're still showing a 35% chance of a rate cut. I think it's bananas. Okay, listen to the Fed. Okay, if you look at May, okay, we're at a 60% chance of a rate cut of some sort, or we're really only looking at, actually we're at a 93% chance of at least one rate cut or more. So there's a pretty good chance in May, and I would probably agree with that we would, the 60% chance of the single rate cut will happen. And then in June, we're now looking at potentially a 55% chance that there's going to be at least 2 rate cuts or more. So, or at least 2 rate cuts, and maybe even a third. I still think way too optimistic. Even though these numbers came down, I don't think they're low enough. I really don't think, I don't think the market's getting it. I don't think they're understanding that the Fed's not moving. So there's still chances for rate cuts. So still chances to get your heart ripped out if you're in the markets and you think the Fed's going to cut 5, 6, 7 times this year. You're not listening. You're not paying attention. Watch the economic indicators. See what's going on out there. And stay diversified. So that's paying off for our accounts here. Had a great month, 5.54% return on the month, more than doubling the return on the S&P in January. So great month, huge realized gains on the month, and we'll see what happens here in February. We already put on some nice trades on. We got trades on yesterday, feeling pretty well, pretty good on our diversification. We got some stuff expiring this week, so we'll have some buying power to get cranking. All right, I hope this was helpful to you. Good luck in the markets. Everybody take care, stay safe, and we'll talk to you later. Bye-bye.